Right now, we might be witnessing the largest emerging market the world has seen in our generation. We have an opportunity to generate enormous amounts of wealth. Our opportunity to invest in cryptocurrencies now is similar to investing a couple of thousand in the S&P 500 and now having over $11 million. Although investing in this market is quite simple once you know the basics, unfortunately, 99% of people won't pay attention and will be left behind. But for the 1% who do, including you who found this video, you have an opportunity now to be in that 1% and even starting with a small amount of money, potentially become a millionaire in the years to come. I've been in the cryptocurrency space for over 5 years, trading full-time for the last 7. This video will serve as a simple lesson where I'll share everything I've learned throughout my experience, giving you a clear and concise version. I'll show you things like the fundamentals of cryptocurrencies, the short and long-term investment potential I see, how to do simple fundamental and technical analysis so you really understand what you're investing in, different ways to make money in cryptocurrencies, as well as how to buy, sell, and organize all your crypto activity, along with all the tips and tricks I've learned over the years. If you make it to the end of the video, you'll have a simple investment foundation to be able to invest like the 1%. So if that sounds good, make sure to like the video, subscribe to the channel if you like trading and investing, and if you end up enjoying this video, share it with a friend who you also want to join the Future Millionaires Club. Let's start with the fundamentals of cryptocurrencies so you understand the main point of the entire market. The best way to think about cryptocurrencies is as a secure and transparent way to store and share information that is seen by everyone, but not necessarily controlled by a single person. This form of technology allows information to be transferable between parties, and during that process of transfer, there is a form of encryption that makes it a secure way to share information. But it can be done completely on an open ledger where everyone can transparently see what's happening. There is no central entity that we trust to be transparent because both parties agree and the information is there for everyone to see. Although there are a ton of cryptocurrencies out there are some main applications of cryptocurrencies. The first and largest is something that stores value, protecting against currency degradation, and being a fast way to transfer wealth across borders without having to deal with centralized government entities. Many people think this is only for malicious activities, but it's actually one of the most transparent ways to transact. The second major application for cryptocurrencies is something called DeFi, which stands for decentralized finance. A simple way to look at it is to consider it as programmable money. Imagine a network where you can set up automations where all transactions happen on their own, and you can keep building a network without the need for all these different departments of people doing individual things. It's a network of programmable money where something called smart contracts execute all these functions. We'll dive deeper into understanding a bit about how this works so you can truly comprehend it. Coins like Ethereum, Solana, BNB are all things that can store some value but are mainly geared towards decentralized finance, and this will probably be one of the largest emerging markets the world has seen. As I said, we'll dive deeper into that. The third largest category is something called stablecoins. These aren't really used as investment vehicles, but rather they are a cryptographic version meant to represent the value of a fiat currency. When I say fiat currency, I mean something like the US dollar or the euro, currencies that are issued by a central government. Some of the largest are the stablecoin USDT, which will always be worth $1 and basically allows you to use regular money but on the blockchain. Before we dive deeper into key terms and learn a bit more about cryptocurrencies, I want to move on to Section 2 and talk about the enormous short and long-term investment potential for this emerging market. You've probably heard a lot about Bitcoin, and the reason Bitcoin has gained so much traction in recent years is because it's considered a store of value that fights against one of the biggest problems countries have in general, and the US is definitely starting to see, which is something called currency degradation. Currency degradation is basically when centralized governments continue printing money, increasing the total amount of money out there, which over time will erode the purchasing power of the currency. You can see with the US dollar that since the 1900s, $100 now only has the purchasing power of $3 in 2020. This was during the COVID-19 pandemic, where we printed 22% of the total supply of US dollars in just a few years, which is now drastically driving down the purchasing power of the US dollar. We're losing around 3 to 4% of our purchasing power every year, and this is one of the biggest problems the US is trying to solve. There is something called the global reserve currency. Currently, the US dollar is the world's reserve currency. It's what we trade barrels of oil with. You can think of it as the global standard of gold currency, and you can see that the reserve currency status has changed hands quite a bit throughout history. In 1450, Portugal had the status, then it went to Spain for about 110 years, then to the Netherlands for 80 years, to France for 95 years, to Great Britain for about 105 years, and now the US is approaching that average duration of time. Some of the other major players in the world, like Saudi Arabia and China, are potentially looking to switch currencies for oil trading. If that happens and the US loses reserve currency status, in about 6 months, the US would lose around 30% of its value. The cost of importing goods would become drastically more expensive. All the debt we've been accumulating, the government wouldn't be able to borrow at current rates, which would result in a larger deficit that would need to be filled either by raising taxes or printing more money, which then we would experience something called hyperinflation, which is what many countries with older currencies see. This is why you can go to different countries with US dollars and have tremendously more purchasing power. I'm not here to play the Armageddon thesis, but what I am saying is that even if this doesn't happen, in the last 120 years, we've seen our currency lose around 97% of its value. If that doesn't sound alarm bells saying the globe needs to store value that can't be inflated and manipulated by a centralized entity, then I don't know what will. For years, gold has been the solution to this problem, and gold has been a tremendous store of value. But if we really look at the breakdown of gold, is it verifiable? Do we know how much gold is really in the reserves? It's still controlled by a central entity, whether it's a bank or a government. Is it fungible? Is it unique? Is it easily replaceable? The answer is no. Is it portable? Absolutely not. You can't carry gold bars in your pockets. Is it durable? Yes, it's very durable. Is it divisible? It's not so easy to divide fractional amounts of gold. It needs to go through a process, and it's not easy to do. Is it moderately scarce? Yes, we continue mining gold over time, and we also don't know how much gold there is in the solar system, which could drastically impact the real value we see in it. Does it have a stable history? Yes, gold has a very stable history. It's been one of the best stores of value over time. Is it censorship resistant? Can the government or a central entity hide it or lie about it? It gets a moderate rating. Is it programmable? Of course, gold is not programmable. Is it decentralized? Again, most of the gold in the world is still primarily owned by central governments, so the decentralization of that is still at a moderate level. You can see that traditional money gets a low rating in almost all important categories. And if we look at Bitcoin in comparison, is it verifiable? Extremely. Is it fungible? Extremely. Is it portable? Extremely. Is it durable? It gets a moderate rating. Is it divisible? It's extremely scarce because we know there will only be 21 million Bitcoins. It still doesn't have a stable history, which is also an extreme upside opportunity considering it's so early in the market. Is it censorship resistant? Extremely. Everything is open and on the chain for people to see. It's also openly programmable and 100% decentralized. So, to rate coins, Bitcoin automatically destroys everything we've seen before and is a way we can store value and easily send it around the world without having to physically move anything or deal with centralized governments. And if we look at the chart of Bitcoin compared to the chart of the US dollar, I'm pretty sure you understand where we're going with this. As I said, I'm not here to call Armageddon, but what I am saying is that if you're in your 20s or 30s, the chances of something happening or just seeing what we're seeing now continue to happen is extremely high. Considering Bitcoin still sits at only $1.3 trillion, I don't just see this potentially equaling the market cap of gold, which sits at around $15.5 trillion, but it could even see this being more accessible to more people than gold, potentially surpassing the market cap of gold. If Bitcoin could surpass the market cap of gold, we would see the price of Bitcoin go over $1 million, which, if we look at the overall market cap, would only require around 15% of the total global money in Bitcoin for this to happen. So make sure not to take this as financial advice, but I don't just see this as an incredible investment opportunity, but the amount of money that's going to be injected into new companies and new cryptocurrencies that can go up hundreds of times is something the world has never seen and is going to allow many of us to amass a tremendous amount of wealth. But we need to know the details of how to actually interact with the market and set ourselves up in simple ways to capitalize on that. That's what we're going to dive deeper into now. On the DeFi side, imagine banking and finance, all of healthcare, government, energy, sustainability, now being programmable. Instead of a bunch of people working to allow, for example, someone to buy and sell a house, all of this can now be completely programmed, transparently and securely. The underlying currency that is required to be able to participate in this ecosystem is what people will hold, and this is basically what Ethereum or Solana or BNB is. Now that we understand the concepts, the investment opportunity, and how this applies to real life, let's dive deeper into some of the fundamentals of cryptocurrencies, and I'm also going to share with you a Notion sheet with all my favorite cryptocurrency resources. I'll break down a bit of each one, but this will be in the description so you have a central area with all the official links so you can also follow along as we dive deeper into this. These are some of the key terms I want to go over before we dive deeper into some of the software. First, understand what an exchange is. Think of this as a way to buy, sell, and trade cryptocurrencies and other assets. There are different types of exchanges. A centralized exchange is something like Coinbase or Binance, where the business acts as a middleman to facilitate transactions between two parties. The next type of exchange is something called a DEX or decentralized exchange. This is a peer-to-peer marketplace that allows buyers and sellers of cryptocurrencies to transact directly with each other without using any centralized entity. To understand what's going on under the hood of a cryptocurrency and comprehend the details that make it good or bad, we refer to this as tokenomics. It's the study and analysis of the economic aspects of a cryptocurrency or blockchain project, with a particular focus on the design and distribution of the native tokens that will play into different metrics we're going to see, including market cap, which shows us how many of these individual tokens are available for people to buy and sell. This is different from the total supply, which in the case of Bitcoin, as we were talking about, has a total maximum supply of 21 million tokens. Some projects have this, others don't. For example, the US dollar doesn't have a maximum on how many US dollars we're going to print, which would mean the total supply of the US dollar is infinite. This will tell us the total amount of coins that can be issued into circulation. If there is a total supply, we can look at something called FDV, which stands for fully diluted value, which shows us the market cap at the current price of each coin if all coins were put into circulation. Often, cryptocurrencies will only release a small portion of their tokens at first, so you'll be able to see the market cap taking the total circulating supply of the tokens that are out and multiplying them by the amount of price per unit. This is a better way for us to get an idea of the true value of a company as more coins are added to the circulating supply. This term is called dilution, and this is exactly what you're seeing with, for example, the US dollar when we print more money. You're diluting the current supply. For example, say we had 6 coins here, and each one was valued at $10. That would mean the market cap would be $60, and the circulating supply would be 6. Say, for example, we kept the same amount of money in the market, so no new money was added, but now we doubled the total supply, which would mean there would now be 12 tokens in total. Automatically, considering there's only $60 in market cap, each one of these coins would now cost $5 instead of 10. So say you only had 6 tokens. If they add more to the supply, you can keep the same amount of tokens, but now you've lost half of your value. This process is called dilution. Then terms like trend and bullish. When people say markets are trending, it means the market is moving in a certain way. For example, an uptrend would look like this, with higher highs and higher lows. This is a bullish trend. Similarly, a downtrend would have lower highs and lower lows, which would also be considered a bearish trend. This will be referred to as bearish. Now that we know our fundamentals, let's use some of these principles in the real world. My favorite resource of all time is probably CoinMarketCap, which will allow us to see all these details, including total supply, circulating supply, FDV. This can be your fundamental research hub for any coin you hear people mention. For example, someone says, check out this new coin called SolarX. You can look it up, see a price chart, see all the official websites, including Twitter and Telegram, see the total market cap. It will also show us our FDV here, and you can see that only 20 million of the 400 million tokens are actually released into circulation. If you click here and look at our white paper, it will show you a vesting schedule that shows how they plan to send out all 400 million tokens over a period of time. Another good resource that does something very similar is CoinGecko. This will also show you all the major cryptocurrencies by market cap, as well as all the other information we also wanted to know. Another resource I like to look at is something called DeFi Llama. This shows how much money is locked in different blockchains, which is essentially the building block for other cryptocurrencies to be built on. For this to happen, you can hold the token and stake it to be part of the network, validating those transactions. Something like Ethereum, for example, works with a process called proof of stake, which, as I said, basically validates transactions of individuals who hold more than 30 Ethereum tokens and have staked them on the network. So just as an example of how I use this, I like to find investment opportunities by looking at comparisons between different blockchains with different amounts of total value locked in them. You can see something called protocols here, which are essentially blockchains, and you can see that one of the newer protocols, called Base, is Coinbase's new main protocol that currently has $1.6 billion in total value locked. Now, if we look, for example, at Binance's version of this, during a major bullish move in cryptocurrencies, you can see that the total value locked at the peak of the market was $21 billion. So you can see that the number one DEX for Binance Smart Chain was PancakeSwap. So if we go back to our CoinMarketCap and look at PancakeSwap, you can see that correspondingly at the same time, PancakeSwap's market cap was around 6.8 billion and moved from a few hundred million in market cap. So if I go to Base, which is Coinbase's main layer 2, they could potentially increase their value by 20 times or more if we see a major increase in cryptocurrencies. I found what I think is an incredible opportunity in cryptocurrencies by finding Coinbase's version of Pancake called Aerodrome, which you can see is still sitting at a market cap of only $400 million, similar to what we saw in PancakeSwap before it went up to $6.6 billion. And you can see here their circulating supply. They can only dilute the supply by another 50%, which means they can't hyperinflate the currency and make it completely useless. And you'll see that the fully diluted market cap is around $1 billion compared to this other coin we were looking at, which is going to unlock 400 million tokens and only has around 20 million tokens in circulation. This is a bit more advanced version of some of the cryptocurrency investments, but I wanted to show you how I connect all these things. So even if you just want to look at the price of basic coins and know what's going on in the market, you can use CoinMarketCap to do so. Another tool I use for comparative analysis is something called market cap of. Many of these coins will price their coin ridiculously cheap, so you can have hundreds of millions of coins, and then people think that even if it goes up to a penny, they'll have millions of dollars. But if you look at the market cap, there's still $12 billion in market cap, and this will show me how much XRP would cost if it had the current market cap of Bitcoin. I can also switch between any token I want. For example, I could put Solana, and then it would show me how much XRP would cost if it had the market cap of Solana. This is a good tool to be able to compare the sizes of cryptocurrencies and get a realistic view of how much your investment could move. So say, for example, we take Aerodrome, and we want to see how much Aerodrome would cost if it went up to PancakeSwap's all-time high. You can see how much upside potential you could expect using something called comparative analysis. Now that we know a bit about the fundamentals of cryptocurrencies, let's dive deeper into some of the technical aspects of cryptocurrencies. I'm going to show you some interesting ways to analyze cryptocurrencies on a technical level. The main tool we're going to use for that is something called TradingView. You can go directly to this website